How many shares should you buy? I get this question a lot. A lot of people ask me this question. They want to know, how do I know how many shares of a stock I should buy, Patrick? If I want to make $1 million, how many shares of TBLT should I buy? Well, it shouldn't be about how much money you're wanting to make, but more so it should be about how much money you're willing to lose. Talking about that idea in this video, so you know what to do. Stay tuned. What's going on, day trading family? What's good? It's Monday. Markets closed today, Martin Luther King Day. So I want to make a little video kind of talking about how I'm deciding how many shares I want to buy. Now, I'll admit sometimes I just end up randomly buying the amount of shares that I can buy depending on my buying power. So if I know I have $30,000 worth of buying power and I have a $10 stock, I might end up buying 3,000 shares of that stock, because a lot of times I don't plan on losing when I go into a trade. I know that sounds crazy, but a lot of times I really just know, not so much guaranteed, but I got a pretty good idea that I'm going to be able to either get out for a small profit or, a decent sized profit. Depending on the stock, depending on the move, that will adjust the amount of shares. But normally what I like to do is I like to figure out what's my risk, what's the reward, how many shares can I afford to buy if I only want to risk 10 cents. So let's say I wanted to buy TBLT here, thinking we might get that push above $4. I wanted to buy it here at the $3.50 area, right there. Kind of risking the idea of buying here at $3.50 for the possible pullback, we'll say down here to the bottom of this candle, which would give me a risk of 20 cents. So now I know that if I risk 20 cents, how many shares am I willing to take? Now, normally I like to trade on the idea of cents, in the sense that I'm looking for possibly 40, 50 cents on this trade. And if I buy 3,000 shares, that's $1,500 in profit. If I buy 3,000 shares and I lose 20 cents, I'm losing $600. So it's easier to think about the cents, if that makes sense. Whoa, if that makes sense. Get it? Okay. But what I'm really looking for here is the idea that if I'm going to risk 20 cents, am I willing to absorb that loss? Because remember, at the end of the day, we're trading and there's a good chance, I don't want to say a good chance, but there's a chance that you're going to lose a trade. So you have to be willing, you have to be able to handle the loss. And the best way to be able to handle loss is by predefining your risk. That risk is not always going to be on point. Let's say I want to risk 20 cents here, and I risk 20 cents, and all of a sudden I get slippage, and now I'm down 30 cents. So there's always the unknowns, the variables that we can't account for. We don't know exactly what's going to happen with this stock in the future. We're just trying to make the best educated guess, I guess. Really at the end of the day, day trading, you're kind of just guessing where the stock is going to go next. And with the idea of learning patterns, learning how these stocks move, being able to see the resistance, the support, and all of that, being able to have those indicators, we're able to then make our guesses more educated. So instead of just a 50-50 gamble, we're taking a 70-80% guess, because in the past we've been right 80% of the time about the move that is to come. And obviously you could be a profitable day trader with only a 51% win rate as long as your losses are much smaller, but that's not what this video is about. This video is about how do you determine how many shares to buy. So for example, TBLT, I'm risking 20 cents and I'm thinking I'd be okay with losing $600 on this trade, because I know there's a pretty good chance if this thing does break the breaks out of this downward trend right here at open, we get the move up there to $4. I can see already, okay, from $3.50 area up there to $4, that's a 50-cent win. So if I have 3,000 shares, that's $1,500. And there's probably an even better chance that if we break above $4, we might get $4.20, $4.30, $4.50, and all the way up there to $5.50. Let's just be realistic here and think that there's probably a good chance if the stock does break above $4, there's a good idea that, normally when a stock breaks over the whole dollar, we're going to get 10, 20 cents. We're looking at a 60, 70, 80 cent return here with pretty good probability that we're going to break out to the upside. So I'm okay with risking 20 cents being $600. And I'm looking for the reward of $1,500, $1,600, or even possibly $2,000. And that's really what I'm doing going into the trades. I'm not really thinking about, oh my gosh, how much money am I willing to lose doing calculations, trying to figure out all the calculations before going into the trade. I'm more so just looking at the cents, the 0.00 part of the trade. So if I know I'm getting in here at 350, I know that there was support there at the 330s, I'm risking 20 cents for the possible 40, 60, 70, 80 cent move to the upside. And that's a pretty good risk reward. And really, depending on the stock, depending on the price of the stock, it's going to dictate how many shares you can buy as well. And with your account, your margin, and all that. You got to look at the opportunities. You got to be able to quickly figure out what's your risk, what's your reward. And you just saw how I did that just by looking at the chart, by establishing my support areas, my buy area, and my possible profit target area. So really simple, really easy. If you're looking at a chart, all you got to do is just figure out where your support is, figure out what's your risk on the trade. If you're only willing to risk $300 on this trade, well, then think about that. If I'm risking $300, how many shares can I buy? Well, that would be 1,500 shares on a 20-cent risk. Pretty simple, pretty easy. Don't make it rocket science. There's no perfect equation. There's no spreadsheet that's going to make it easy for you to figure out your risk reward. You should really just be able to identify right away by looking at the chart, figuring out where that support is, where that resistance is. And once you can just see that, you can just instantly be able to identify where all that's happening and be able to identify what you're going to do from there. It's much easier to jump into the trade. Now, I also want to remind you, you want to be able to take a deep breath and figure out these things before you enter. If you just see a stock going to the moon, let's say you missed out on this 350 buy and all of a sudden the stock is now squeezing higher and all you're thinking about is bam, 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 hitting the hotkeys, trying to get in as fast as possible, trying to buy as many shares as possible. Well, there's also a chance that you might get filled up here at the 380s, $4 area. And let's say this thing doesn't break over $4. Well, now you're risking 30, 40 cents, maybe possibly 60 cents for not that much upside. So you really need to make sure that your entries are on point. You have to be able to determine your risk, your reward in a very fast manner. You don't have all day. You can't spend an hour trying to figure out where the risk is, where the reward is. Looking at the daily chart here, I can see back there in December of 2018 that we had a high on this candle there at $4.50. So it makes sense to me that there's not really much resistance in terms of the $4 area, but we do have resistance here at $4.50. The stock is squeezing higher. We got above that resistance here at the $3 area. So I'm thinking there's a good chance that this thing could possibly get up there to the $4.50 area, and that's exactly what we got. So you have to be able to identify the support, the resistance in a very hectic situation because you're going to have the emotions, you're going to have FOMO, you're going to have all this stuff hitting you and trying to basically make you not think clearly, if that makes sense. So all this stuff is going on, everything that's happening, it's basically happening in a sense that it's making you get off your game. If you're not able to think clearly and rationally, there's probably a good chance that you might end up just losing a lot of money because you're going to end up just buying as many shares as possible because you're just hotkey. And that's one thing that I've learned. You have to be careful with hotkeys because it makes it really easy to buy. It makes it really easy to just jump in on a stock before actually figuring out where your risk is, where your reward is. And not every single stock is going to be easy to figure that out. It's not always going to be a clear idea of like where my risk is, where my reward is. But if you trade with the idea, when you're going into a trade, you have the 20 cent, the 10 cent loss. You're going into that trade with that idea in mind. You're able to instantly identify kind of what your risk is, how many shares you could buy. Also, a stock that's very volatile. Let's say a stock is going up $1, $2 every 5 minutes. It's going crazy. You can also adjust your amount of shares depending on that. If you find a stock that's going really slow, the stock is moving, 10 cents every 5 minutes. It's just nice and slowly moving. And, every little pullback is 10 cents and then it's bouncing back. It's showing strength. It's moving higher. Then you're able to also load up more shares because you're getting smaller moves. A stock like this that's going from $3, from $2 up to $1 to $3 to $5, all that. It's all going crazy. when I see a stock like this, when I see a stock like this, a lot of times I end up lowering my share size because I know if I buy 1,000 shares, I get a full dollar move. That's $1,000 in profit. Same idea, if it crashes, I'm going to be able to have a smaller risk because I'm going to be able to get out faster with a smaller size than if I have a larger size, depending on the volume, the liquidity. Over time, you're going to build that experience. You're going to see the different setups. You're going to see the different opportunities. But for me, I'm really just trying to, right off the bat, figure out, okay, I'm risking 10 cents, 20 cents. I'm okay with that. If I risk 20 cents, I could buy 3,000 shares here. And I think that's really kind of how I trade basically every stock. I'm just instantly knowing, okay, I'm risking this much. I'm risking it. I'm going. But when you're buying at a support area, when you're buying the dip, you're able to get that support at that area, and you're also able to kind of have a smaller stop loss instead of buying the breakout. When you're buying the breakout to the upside, when you're just buying a stock that's going higher and higher, it's much harder to figure out where your risk is, where your reward is. So when you're buying that dip, you're able to kind of figure out, okay, I'm buying the dip here off the 350 area. I'm buying this dip area. Bam, bam, bam. I'm buying it. I'm risking 20 cents here for that possible move back up there to $4. So really simple, really easy, but you have to be able to think clearly in that moment. You have to be able to identify the support and then figure out, how is the stock moving? What's the volume? Is there a lot of volume? Are you able to get in with the large size? Remember, the larger your position size, the harder it is to get out. If you're trying to get out with 20,000 shares, it's going to be hard to get out at the top because of slippage and also just overall supply and demand. So if you are taking large supply from the market when you buy, you're now adding that large supply back to the market when you sell. So supply and demand, the more volume, the more shares you have to sell. Sometimes if the volume isn't there as the stock is crashing, let's say the stock goes from $4 up there to $5 again, and you're trying to sell up here at the 520 area, it's going to be much harder to get filled because now the stock's pulling back, the buyers are not stepping in, and you have large size, and you're hitting limit orders, you're trying to get out, but you just can't get out, and you end up getting a lot of slippage. So you got to think about that as well. That's one of the issues with trading these stocks, is they're very volatile, and when they start to crash, it's much harder to get filled with large size. It's also one of the reasons you can't just go and buy 100,000 shares of TBLT and hope and pray that it goes to the moon. Well, I guess you could, but it makes it much more difficult to get in and get out fast when you have larger size. So a lot of times, most traders end up having 5,000, 10,000 shares depending on the action and all that. So over time, you kind of learn with experience what works best for you, the sizing, what you're comfortable with. I tell most people, when you first start out trading, start out with small size, and increase size as you go. Don't start out with large size because you're going to end up emotionally not being able to handle the risk of having a very large loss. So there it is, how I figure out how many shares I'm going to buy, how many shares you should buy, and all that fun stuff. Really, it just comes down to risk reward. It's not so much like, oh, I could buy 1 billion. It's not so much like I could buy 20,000 shares of TBLT because I have the buying power. It's more so about, what's my risk, what's my return. I'll talk to you guys later on. If you haven't already, hit that subscribe button.